Hello and welcome to this episode of the Digital Disruption Podcast, brought to you by Novus Strategy and Consulting with Pete Gatenby and myself, Chris Williams. In today's episode, we're going to be talking about conveyancing scams in wake of the recent announcement from Lloyd's banking group that almost 29% of transactions have fraud embedded in them. This is a topic that we must talk about. It's not a particular popular topic when it comes to conveyancers and their client accounts. But as we go through a digital transformation inside the home buying sector, this has to be an area that is addressed and looked at. And in today's episode, we're going to break it down and look at the potential possibilities of what might change in the industry. Hello, Pete. Well, welcome to today's episode.
Hello, mate. Summer is finally here.
Well, I can see that in your nice sporting pair of shorts. And it is rather warm in the studio today. We have a fan, but there we go. So this is a hot topic. It's a difficult topic in many instances. Well, I say difficult. It's an important topic, but it's also one which has brought about a lot of interest, especially when we talked about synchronization and client accounts inside conveyancers. But just talking at a high level about this, there's a recent report that's come out from Lloyd's banking group. Mortgage Solutions covered it. But there's been a bit more detail in the last few days as of the 18th of June around this. And what they reported was conveyancing scams increased last year by 29%. Hacked emails allowing fraudsters to intercept property deposit payments was the big one. And on average, victims were losing £47,000, but in some cases, it's more than $250,000. Now, those figures alone are astronomical. They're things that have to be addressed. What should the industry be doing?
I think the first thing that's staggering is a 29% increase is huge. There's clearly a target. This tells me there's a target here from the crooks, the bad guys who are clearly going after the conveyancing process as a target, and they're getting success. Like an average of, was it 47 or 49,000? 47,000?
47,000.
So an average of 47,000, they're big wins, right? If you're a bedroom hacker wherever you are, or you're a part of an organised crime, that's big returns for your time. So you can see why it's increasing, and we as an industry had to look at ourselves and say, well, why is this happening? Yeah, of course we can say, well, their emails are getting hacked, it's Google, it's Microsoft problem, but it's not really, because actually the first line of defence, and we've all done our Infosys training and sat through all of the training videos that we do in the professional world, but the first line of defence is the individual themselves. Now, I'd be really interested to know kind of what is there a particular demographic that they're targeting, or is it quite broad? Yeah,
well, it says that 45% of victims are aged 39 and under, which I thought was an interesting statistic in itself, because what it tells us is a group that is usually very digitally mature and savvy is actually being targeted and ultimately being caught out.
Absolutely. Now that, as you said, that demographic is normally it's normally the flip side, right? It's normally the older demographics that are targeted by online scams, phishing emails and the like. The younger demographics normally much more dialed into the rogue text, asking them to click a link and then enter their details. The younger generation much better at avoiding those, being digital natives that they are. So that says to me that they're typically targeting people who are either first-time buyers or perhaps going through the transaction or the buying process for the second or perhaps third time. So this is relatively new to them. It's not a well-trodden path. And it's complex, right? We say this a lot. The home buying process and the conveyancing process in the UK is complex. For all the reasons we know, it's complex. And if you're not familiar with it, things seem to happen almost at random. Now, I go through this example quite a lot, but when me and my missus bought our house, we didn't really know what was going on. 90% of the time, we were my missus was the person on the phone to the conveyancers, probably becoming quite annoying because she wanted updates. She wanted to understand if we could do anything to speed up the process. We didn't have a roadmap or a map or an instruction leaflet that told us. We had lots of information, but nothing that guided us through the process. And it says to me that if there's many people in the same situation in that demographic, and there's behaviour that things seem to just happen randomly, when a random thing happens, or you get a random email link that they're asking you to click something, perhaps a phishing email, then they're more likely to click it. And so we as a society, we as an industry, can perhaps look at that and say, well, perhaps we could improve this either by creating better guides, perhaps a co-pilot that can walk through the process with the buyer, or actually can we refine the process and make it a little bit simpler? Quite a lot in that answer, really. But what do you think?
I think we have to break it down. The data tells us that the vast majority of these scams happen through email, i.e. Email communications being intercepted, and scammers either from the conveyancer side or that of the home buyer's side, they essentially have their emails hacked, they monitor the transaction over a period of time, and then trust is built, and therefore that's where they do the intercept. That's one part of it. So it's sort of like, well, what can you change in that process? So in that process, there's the obvious things that you can do with email. You touched on the educational points. I mean, a lot of these are going to be first-time buyers. So actually, it's trust. It's like, I'm getting an email from a law firm. I trust who it is. And, let's face it, scammers aren't idiots. They're actually quite clever people to do what it is that they're doing. So there's the behavioural element, and there's an educational point on that side. There's then technological, i.e. what can we do with technology to help improve this? And there's several things that have been done and continue to be done and improved there. But actually, the third element of this is, well, do we not just need to kind of change the fabric of this process and actually how it's done?
Yeah.
So if I was being cynical, well, not necessarily cynical, but being pragmatic, when you're investigating issues and trying to reimagine how things can be done, nothing's off the table. So you put everything on the table. Now, I know that this will be a trigger for certain people in the industry, certain conveyancers. But the first thing I would ask is, why is a law firm handling client money in the 21st century?
Yep.
Okay. Now, I'm not saying there's plenty of reasons for it, but we have to ask that we take everything off the table. And that's what we do as management consultants. We go in and we look at these sorts of things. Why are we doing this? How do you de-risk that? Why are we moving money from my bank account to a law firm bank account? It's sitting in there for a few days and then moving it from there on and on. I mean, there could be 3 or 4 transactions going on here when we don't necessarily need to do that. So, of course, that's the other part of this. And so I think that the technological element that I touched on as my sort of second point, I think there's things that can be done today there, which are, introducing, better processes and things like that. But then that third bit about reimagining that process, that's currently underway, but that's not going to happen overnight. That's going to take time. But it's something that perhaps maybe should be considered or innovated around more today. So we don't need to wait for synchronization for this stuff, I don't think. I think there's better ways of doing this, and there are good vendors out there who've got payment capabilities where they can hold money, they can put holds on funds, and rather than them being these sort of transactions and emails being the trigger for it, the process is sort of updated a little bit. And I think if we're going to protect consumers and stop this, then that's certainly one way of looking at it. And I think that more can be done and should be done to innovate around that as we move towards things like synchronization, which essentially will remove this part of the process. Scammers will find new ways.
They will, yeah.
And that's the other thing to sort of caveat this with. But then to the behavioural bit, I think this is what the likes of Lloyd and others are trying to do, is to educate on the process. I think, in fairness to conveyancers and law firms, certainly the ones that I know and have liaised with, they do a lot themselves in terms of actually educating their clients as they come on board. You're not going to get an email somewhere else, everything changed. So there is a lot being done. A question I had, and I couldn't get the answer from the reports that were out, and it'd be great actually to, for another episode, perhaps we can get a panel going actually. In fact, we should have a panel on payments and get a couple of the payment guys in, some of the lenders, and ask actually quite pertinent questions such as, where do these scams happen the most? Because we're saying here it's on email, but is there a particular profile of law firm that it's happening to? Are they using particular types of technologies in a particular way? Who's doing this sort of intelligence gathering to understand this? Because we live in a world of data where we can actually look at all of this, and we will be able to create patterns. And with those patterns, we can then find out, well, where's this happening the most? Because there's not a lot in here other than the high level. It's happening a lot, and there's a lot of money involved. And I think there's more that could be done there.
Yeah, I think you're right. I think you're absolutely right. It's an industry-wide problem that's costing the economy and lenders and consumers, or the buyers, sellers, a lot of money. And I think big problems sometimes require big solutions, but we can always put in measures that iteratively improve while the big solutions are coming down the path. So that'd be my biggest takeaway on that one. Breaking this down then, if we have a little look at the players that are involved, what can lenders do to perhaps reduce this issue in the industry?
Well, I think one thing that you can do is obviously innovate around payments. There is obviously innovation around payments. I think with the ISO 20022 standards coming in, property payments are going to be have a code. They're going to be coded. I think that can help. I think that innovation also can. Errol and I were looking at this at the back end of last year, and we were exploring and with a particular client, we were looking at different payment solution providers where money's effectively ring fenced. So the money's ring fenced in your account. It's it's held there for the transaction, and then somebody else on the other side that's validated. I'm not explaining that brilliantly from a technological standpoint, but just for the kind of purpose of the example. And it was clear that was definitely something that could be done. The challenge is that some of the suppliers or the vendors in market that had that capability, the integrations that were needed to do it weren't quite mature enough yet to do that at scale. But, I think from a lender standpoint, definitely innovating around payments and looking at this. Now, in fairness, they are. It's not like nobody isn't. Some of the tier ones are definitely looking at this. But are they looking at it just through a payment lens? The other side of it is, and I think about, we supported this with LMS last year as well. That they did a piece on at the Ideathon at the Innovate Finance event that we worked with them on, and that looked and explored a similar method about how you could do this sort of stuff. Yeah. And it was quite interesting. They came second, but overwhelmingly the people in the audience that were voting, who were all banks and lenders specifically, who were voting for the winners of that competition, they all voted for a particular fraud use case that was utilising ISO 20022, which is great, fine. But again, where's the innovation around payments in the transfer of money from, in the home buying process? So there are some players out there doing stuff, but this stuff is all way down the track. Whereas I'm sort of like, well, what can we do today? There's a use case here. We can actually leverage some technology today. So for lenders, I think more can be done around innovation on payments. They're doing some, but I definitely think that some could be more that's focused around the purchase side of it. The flip side away from the technology is the educational piece, which in fairness, again, of them, all of them are trying to do. But my big one would be an invitation to lenders to look more to innovate around payments.
Makes sense. Conveyancing then?
Look, I think the conveyancing industry is, and all credit to them, they are definitely adopting technology now and leveraging technology to make significant improvements to not just the user experience, but actually to protect the consumer in this. There's no question about it. And we've had recent conversations with big firms around some of this. It's clear that they're doing it, that they're doing what they can. It's difficult for conveyancers in some instances because there are some that innovate around how they move money. So I know some who have got integrations into banks and how they do the transfers and so on and so forth, but all they can do is leverage what's in market today from a technological standpoint. For them to innovate around technology, they're going to have to collaborate with payment solution providers and other people in industry to be able to kind of look at this. Again, the players that are in market around this particular area and looking at settlement and lodgement, but specifically settlement, they are promoting a capability which is years away and requires huge amounts of heavy lifting by the Bank of England and so on and so forth. So I think that law firms are quite limited in what they can do unless the lenders innovate more around payments and vendors in market actually start to bring some solutions that leverage today's technology and innovate around today's technology to do better stuff. So I think that, again, I'm kind of putting it back to vendors and lenders here, but specifically what conveyancers can do, and the vast majority of them are doing this anyway, is obviously to continue to push on the educational front with their clients, with the obviously the lawyers that they have. And in fairness, the vast majority of them do that, and are legislated to do it in lots of ways. So beyond that, I think it's going to be for them to try to lobby and push a bit more back into industry, back into technology vendors and lenders, and say, look, hey, we're willing to collaborate around this, and we want to do more with it.
Yeah, absolutely. It feels to me that the conveyancers are somewhat having to focus on the symptoms rather than the cause.
Yeah, I think that's a great way of putting it, actually.
You see what I'm trying to say, which is, look, they control the behaviours, they influence the behaviours of the customer the most because they have the most interactions with them, alongside the brokers and the other, and such like. But they're the ones who can really perhaps affect the behaviour. Education from lenders is always going to be good and they're always going to push it. But lenders are not the ones talking to the customers throughout that process, it's the conveyancers.
And I think, in summary, I think what we're saying here is as follows. What can we do today? What can we do tomorrow? And what can we do in the future?
Yeah.
Today, immediately, educate.
Yep.
Cross market.
Yeah, agreed.
Tomorrow, cross-collaborate. Lenders, driven by lenders, payment initiation, payment providers, around leveraging what you can do today and leveraging what you can do with technology today for tomorrow. Not waiting for synchronization or these other things. This is going to be an iterative process towards that. And I think there's that, so that's it. And then what can we do in the future? Well, that's kind of coming down the track, if it does come down the track in the way that in the guises that have been set out. And I think for me, that's probably it, really. I was quite shocked by the statistics. I think it's well worth highlighting. I'd definitely like to have a session we can get a lender and some payment people in on some panel sessions to talk about this, perhaps with you and Ash. I think that would be a great one.
Yeah, definitely.
So that concludes this episode of the Digital Disruption Podcast. Thanks for joining us. Please do like, follow and share. And as always, get in touch if there's particular topics that you are interested in us talking about. But for now, thanks for tuning in, and we will see you again next time.
Thanks a lot.